Marvin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Hello, Namaskar. You're watching BTTV. I'm Tanya Aneja. This is Market Today, a show where we'll get you all the latest market updates, stocks and sectors that are buzzing in and much more. Well, Indian markets ended on a positive note yesterday and also erased some of the previous session losses, with Nifty ending above that 22,100 odd level mark amid buying across the sectors. The small cap index, that bounced 3%, which was a relief, and broader market also saw a decent bounce as well. Now the question is whether this momentum will sustain or not, and we'll find out with our market experts soon. But let's start with the pre-market open action, and on your screens, Nifty in the red. We were expecting a gap down opening for Nifty amid weak global cues, and Nifty is now trading at 22,064, but the good news is that the 22,000 level odd mark is still intact, and Nifty Bank down around 217 points as we speak, 46,572. That's the level on this index, and we have stocks which are buzzing in today's trading session, and let's pull up that. Adani Enterprises, Adani Group continues to be in focus. We saw the stock performing really well in yesterday's trading session as well, and today also some of these Adani counters in the green as we speak. 3111, that's the level there on Adani Enterprises. Power Grid, power stocks, remember they were in focus yesterday also. We saw a sharp bounce when it comes to the power space. Some of the other buzzing stocks, Tata Consumer, let's pull up that. That is also in the green as we speak. 1202, that's the level there. This stock is also trading in the green as we speak. Okay, 1200 is the level, 0.14% uptick. ONGC as well. Remember these oil marketing companies that will be in focus today, and this is after government announced a reduction in petrol and diesel prices by 2 rupees per litre, and that will be effective from today only. So all these oil marketing companies like BPCL, ONGC, these companies will be in focus today. But let's do one thing. Let's welcome our market guest on the show today and find out where is the market heading going forward. And Osho Krishan, who is the senior research analyst, technical analyst at Angel One, he's joining us. Very good morning, Osho. Always good to have you on BTTV. Let's start with a technical check on the markets. We saw a sharp pullback yesterday, but the question now is that will the momentum sustain going forward? So let's understand from you that what are the support and resistance level when it comes to Nifty as well as Nifty Bank.
Very good morning, Tanya. Thank you for having me at your show again. Well, coming to the technical perspective of Nifty, then we have seen a decent pullback in last trading session. But if I have to tell you about the derivative perspective, then on Wednesday session, we have witnessed a strong short formation, which has taken the put call ratio towards the zone of 0.65, which is a oversold territory. And
okay, we'll go across to Osho again. I think there's a technical glitch, but meanwhile some of the other companies, some of the other stocks that are in focus today, one stock is Paytm. Let's see what Paytm is doing in today's trading session. So for Paytm, the NPCI has given approval, and that's a positive news, and you can see 5% uptick there. 370, that's the level on Paytm, but I think Osho is back with us. So Osho, please go ahead with the fresh levels on Nifty and Nifty Bank.
Yes, I'm sorry for the technical glitch. Well, I was talking about the technical perspective of Nifty, and as we have seen that yesterday there has been a decent pullback in Nifty, but overall from the Wednesday chart, yesterday we have not seen more than 50% retracement of last trading session. So that means we are yet not out of the woods, and there can be some further correction or consolidation that can be seen in our market. Specifically for Nifty, 22,170 to 22,200 is the zone above which only one can see some kind of positive momentum in the benchmark indices. Even it, until we cross the same zone, there can be some kind of consolidation in the benchmark. But overall, if we will be seeing the market, broader market perspective, then yesterday's session should not make people complacent, because we are yet into a corrective phase, or in a consolidation phase, not into corrective phase. So we can see some further consolidation in the market
Okay, absolutely. We can see some further consolidation. And now we have with us Mr. G. Chokalingam as well, who is the founder and MD at Economics Research. A very good morning, Mr. Chokalingam. Always good to have you on BTTV. Let's understand from you as well that where are the markets headed? I mean, after a bloodbath that we saw on Wednesday, markets saw a sharp recovery in yesterday's trading session, and especially mid cap and small cap. They were, back to life yesterday. We saw a big sharp rise in small cap index as well, and mid cap also. But let's understand from you that what are your thoughts? I mean, is this rally going to sustain going forward, especially in the broader markets, or is there more pain ahead?
In small and mid cap, there are chances of more pain. But overall Sensex and Nifty, I don't have any concern at all. Because if you see historically, whenever such a massive rally happened in small and mid cap, once in 2-3 years they got corrected, and large cap took the lead. And it has got a logical explanation. It's simply because of relative valuation. Now, coming back to small and mid cap, I divide them into 3 segments, the small and mid cap. One is a quality stock with a reasonable valuation, attractive long-term growth story or unlocking story. The second one, great company but great valuation. And third segment is an area where I have a big concern. That is area where many new companies without promoter having a significant holding, weak balance sheets, trading business model, keep changing the names. So that is a kind of pocket in small and mid cap which is causing me big worry. And that pocket alone, I believe, can correct substantially in the short term. So one has to be very, very cautious till end of this month, because this month also coincides with tax filing and tax planning, and therefore more pain can be there in terms of loss booking and offset against the profits made in the early part of the year.
Okay, absolutely. And Mr. Chokalingam, any stock ideas that you would like to recommend, especially after the sharp correction that we have seen?
As a research strategy, I keep saying that at least put 50% in the large cap, and even now keep anywhere from 10-15% cash or gold ETF you can do, and then the remaining money can be on small and mid cap. So in the large cap, I would strongly recommend 2 beaten down stocks, HDFC Life and Kotak Bank. Kotak Bank is yet to unlock a lot of values from subsidiaries. It has got more than 100% subsidiaries. Only in one subsidiary recently it has unlocked money to the tune of over 5,000 crore, and there is a lot of opportunity for unlocking. And the HDFC Life also beaten down. It's a solid growth story. Even in the month of February, the business has shown a double-digit growth, though it is less than the industry growth, but it's quite common fluctuation for HDFC Life. It will come back in line with the industry very soon. So these are the 2 stocks apart from Reliance Industries, ITC. These are the 4 stocks one can concentrate. In the small and mid cap, I would again reiterate Indoco Remedies, Sterling Tools, and Bombay Burma Trading Corporation. Bombay Burma Trading Corporation, personally also I hold, and we have invested, and I believe that there is a possibility of great wealth creation in the stock, because it is trading at 80% discount to value of investments it holds mainly in Britannia. Whereas all other holding companies, the discount is anywhere from 10% to 50% only. So this company, clean the balance sheet, return of everything towards Go Air, and also management mentioned that they won't invest further in Go Air. And also the Wallace brothers, who were one of the original promoters of Bombay Burma more than 150 years ago, they have again become part of promoter group. That also gives me a lot of confidence that the governance issue can be improved in BBDC group. So considering all this, I believe Bombay Burma could be possibly a solid wealth creation story in the small and mid cap space.
Okay, Burma is by the way up 85% in the last 12 months. But let's look at the market opening as well. So, of course, Nifty is in the red as we speak, 22,096, that's the level there. However, 22,000 level, that is intact, so that's the good news. And we have a lot of gainers. Power Grid is the top gainer for you, 271, that's the level there, 2% uptick there. Remember, power stocks, we have been talking about these stocks yesterday, and we saw good action happening in power stocks yesterday as well. A sharp bounce, I would say. NTPC again back in action, 324, that's the level there, 1% uptick there. ONGC also in the green. Adani Enterprises, some of the Adani counters in action today, and Tata Motors, of course, 973, that's the level there. And on the flip side, if you see the losers, BPCL is the top loser for you. Remember, we have been talking about OMCs and the diesel and petrol price cut that has happened. So clearly the impact on this particular counter, 592, that's the level there. Grasim Industries, Infosys was in focus yesterday as well, and the stock is trading at 1636, that's the level there. Some of the banking names in the losers list as well. But Osho, coming to you again for a quick technical check. How do you see the market opening, and any stocks that you want to recommend?
See, overall, as you have mentioned, that 22,000 being a psychological level has acted as a strong support as of now. But on the higher end, we have a resistance around 22,170 to 22,180 spot levels. So we may expect some kind of bounce in the market, but on the higher end, one should maintain some kind of caution. And on the downside towards the zone of 22,000, one should try to look for buying opportunity in the index. There are some counters which are looking positive. Firstly, I will be having my bullish bet in IT, Infosys specifically. Yesterday, Infosys has given a very strong resurgence from the 100-day exponential moving average, and today there has been a bit correction, approximately 1.5%, so which gives a very decent risk reward ratio for Infosys. So one should definitely try to gauge the momentum in the coming period. 1630 is the current, approximately is the current levels where one should try to accumulate, keeping a stop loss of 1600, and on the higher end, I expect the target to be 1680. The second counter, which is looking positive, again a low beta banking name, that is Kotak Bank. Kotak Bank has been maintaining its positive structure from last two trading session, approximately hovering near the zone of 1735. So one should try to accumulate this share. This is at an early sign of inverted head and shoulder pattern. So one can expect a decent up move above the zone of 1760. But even at current levels at 1735, one should try to accumulate it, keeping a stop loss of 1700. The immediate target comes around 1765, but once it reaches the zone, it has the potential to reach the zone of 1800 in the near period.
Okay, absolutely. So these are the technical picks coming in from Osho. But Mr. Chokalingam, coming to you for the power stocks. Of course, they are the top gainers for you in today's trading session. Power Grid, NTPC. NTPC, by the way, has crossed 400 billion units power generation mark as well. What are your thoughts when it comes to the power space? Any stocks that you like?
I think this is a time to book profits in power stock for two reasons. They have rallied a lot, and second, this is an election time, and we have already seen the government cutting down fuel prices, and it's quite unlikely that the power tariff would be allowed to go up in the short term. That could be negative for power stock, and I believe this is ideal time to slowly as they rise, one should book profit because valuation comfort is also not there. Most of them have got now stretched valuations.
Okay, what about you, Osho? Any power stocks that are on your radar?
See, overall, from short-term perspective, yes, there can be some kind of rebound that can be seen in some power counters. Specifically, if I'll be talking about Adani companies, then Adani has seen a decent move in the recent period. So I'm expecting that with the recent development in Adani Power, it gives a potential for a higher upside. So 535, 536 is the current levels. So one should try to accumulate it. On the higher end, I'm not very much aggressive on the targets, but near about 565 to 70 is the next resistance that one can expect in Adani Power. On the downside, 515 should be kept as the stop.
Okay, absolutely. And Paytm, that is again in focus today. NPCI has given approval to Paytm to participate in UPI services as a third-party application provider under a multi-bank model. And 5% uptick there on this particular counter, 370. Mr. Chokalingam, coming to you first, and then I'll go to Osho for a technical check as well. What are your thoughts on Paytm? I mean, such a roller coaster ride for this particular stock.
Normally, I don't cover such stocks for our research unit because I'm little conservative. I always look at bottom line. If bottom line is negative, still no problem. But I should have 100% confidence that in 2 3 years the bottom line will grow so big and it will justify whether you take EV to EBITDA or P ratio. So that kind of comfort I do not have at current price. So I would not recommend Paytm at current price.
Okay, and what about you, Osho?
The same view I have, because it is highly speculated counter based on news. We are witnessing a strong circuit kind of a movement in Paytm as of now. So until there is some kind of a stability that can be seen in Paytm, after that only it will be better to have any view. But on technical perspective, the resistance comes around the zone of 430 and above, which only one can try to accumulate or buy or enter into this counter for a longer duration. But as of now, stay sidelines, maintain some kind of stay updated on the news, and after a recent or after a decent up move, one can definitely try to gauge the moment.
Okay, absolutely. I want to see what these railway stocks are doing. So let's pull up some of these railway counters like Railtel and then RVNL, IRFC. They were also up in the trade yesterday, 10 to 12% uptick there. Sharp recovery that we have seen. Okay, Railtel, of course, on the back of the positive news, 367. That's the level there, 8.3% uptick. Mr. Chokalingam, coming to you, do you prefer any railway stocks at these levels, or you would avoid?
I do not recommend a railway stock at this level for three reasons. One, the small and mid cap always cyclical, and this kind of railway defense stocks also always cyclical. And next, the valuation comfort is not there. And if you see the rise from the bottom, it's a phenomenal. It's made, some of them made even 10 times return. So this is those who are lucky to hold, they may hold, participate in the rally, because I still believe that there is a possibility of the entire stock market cap hitting $5 trillion, which is about 415 lakh crore. So therefore, they may still have a little upside purely on the basis of momentum. Hence, those who are holding, lucky to hold, they can continue to hold. But otherwise, I would not, recommend a fresh buy at these levels.
Okay, Railtel, by the way, is up 240% in the last 12 months. Osho, coming to you, any stocks on your radar from the railway space at these levels? Any stock that you are bullish on, especially after the sharp correction that we have seen in the railway space?
See, overall, all the counters from the railway space has been into a time-wise correction phase. So it's better to wait for the consolidation to happen, and then only one can try to enter into these counters. Because if I'll be plotting the sloping trend line, then majority of the companies are trading below the trend line. So that is the first reason that I am explaining to have a sidelines in these counters. And once there will be a strong up move, because there has been some volatility in last 3 to 4 trading sessions, but a significant up move can only bring some strong boost in these counters and can have a bullish approach in the coming period. But for the timing, it's better to stay sidelines and wait for a strong movement above the trend line.
Okay, what's happening in UPL, Osho? UPL is the top gainer for you from today's trading session. 468, that's the level. Top Nifty gainer, 1.38%, 1.5% uptick there. What are the charts telling you?
The overall UPL is still in a downtrend. We are not having a very strong view in this counter. For short-term duration, there can be some kind of breather that can be seen. On the higher end, 480 is the immediate resistance. So if it breaches the zone of 480 on a decisive manner, then for short-term duration, only one can trigger some kind of buying opportunity in this counter for a higher target of 520 to 525. But as of now, better to stay sidelines. It is hovering at a very strong support zone, but it has not convincingly given a reversal sign of a pattern. So better to stay sidelines, try to accumulate it above 480 odd levels for the target of 525.
Okay, absolutely. And what about you, Mr. Chokalingam? Your thoughts on UPL?
I won't recommend buy on the stock for two reasons. One, the balance sheet in terms of debt and working capital will give me comfort. And second, according to United Nations food price index across the world, they are hitting record low month on month basis, which is negative for agri theme related stocks like UPL. So therefore, I would stay away from the stock.
Okay. And also, Mr. Chokalingam, what are your top overweights right now in this market, especially the ones which provide best risk reward, because they may not have participated in the same way in the last 2 to 3 years rally as some others have.
Yeah, so that is where I sometimes lose opportunity in the momentum-driven market like this. That is why I picked up the stock like Indoco Remedies, Sterling Tools. In the large cap, I've chosen Kotak and HDFC Life because when the markets are at a record high, these are the stocks which give you little comfort because HDFC Life and Kotak Bank still down from a 52-week high, anywhere from 15 to 20%. Similarly, Indoco Remedies and Sterling Tools, they are also down substantially. And apart from that, even Bombay Burma it has moved up 85% from the bottom, but 5-year high was 2020 to 200. And when the small cap index jumped nearly 3 times, this has moved up from the bottom only around 2 times. But valuation comfort is there. This is the only stock among all holding companies to have 80% discount. That too, it is surprising that it has FMCG company holding, but still has that kind of discount. So therefore, I have been recommending these stocks with a lot of comfort on the price front. Apart from that, I strongly believe that it is worth to hold stocks like even ITC and HDFC Bank. These are also recently beaten down. I like the HDFC Bank a lot. I think this is a great opportunity to buy because majority of the branches are now in rural and semi-urban. And that is where the future growth is going to be. Urban places are crowded for the banks. Very difficult to get any new account because everybody has a bank account. Similarly, ITC, I am sure once they demerge water, they may even consider demerging other business verticals like IT services, all that. So therefore, these are the stocks I like most.
Okay, absolutely. Got that. And by the way, real estate space is also on a roll, and we'll discuss about this space and the stocks as well. But now it's time for us to take a short and quick break, but we'll be right back with lots more. So stay tuned.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Okay, absolutely. Welcome back, ladies and gentlemen. Now it's time for us to discuss some real estate stocks as well. And remember, these stocks have been doing really well. Let's pull up Swan Energy for you. The stock is up 6% in today's trading session, 556. That's the level on this counter. Lodha, and then we have Godrej Properties, Phoenix, Prestige, all these stocks in the green as we speak. Coming to you, Osho, first for the real estate pack. Any stocks that are on your radar, any momentizers or any sort of buzzing stocks that you would like to recommend to our viewers?
Overall, there has been a decent correction in majority of the real estate companies like DLF, Godrej Properties, Lodha, and these has given these counters a cool off in the technical formation or technical parameters. So from here onwards, there can be a further consolidation or a minor dip which is left in majority of the companies, and after that there can be a strong accumulation that can be seen in majority of the counters. So one should definitely keep DLF in their radar. It is having a very strong support near the zone of 810 to 820, which was
Okay.
approximately the breakout zone in the previous swing high. So definitely from here onwards, there can be a strong momentum that can be triggered in DLF and followed by Godrej Properties, Lodha, Oberoi Realities also. So one should wait for some kind of a strong rebound in the market, and then they can gauge on these kind of momentum based counters for short term perspective.
Okay, and what about you, Mr. Chokalingam? Any stocks on your radar from the real estate pack?
Most of them have rallied a lot and from the bottom. And, many of them trade even at 30, 40, 60 PE. But still, if somebody is holding stocks like a DLF and Mobile, they may continue to hold as long as the momentum in the market continues, because these are the two, in relative terms, got a strong balance sheet and excellent management quality. So therefore, one can, and also in recent years, they got a lot of land bank. That's the most important. So therefore, they may hold these two stocks, but otherwise, I think this is a great opportunity to, book profit and move away from real estate to very safe conservative sectors and stocks.
Okay, and I think we should pull up Adani stocks as well. Some of these counters are doing pretty well in today's trading session. Adani Ports, Adani Enterprises. Remember, Adani Green was up to, I think it was up 8% yesterday and hit a high of 1875. But today, if we look at the Adani Group pack, Adani Ports is one of the top gainers for you. Then we have Adani Enterprises as well. Any Adani stock that is on your radar, Osho? And especially after the correction that we have seen in the Wednesday trading session.
See, overall, Adani companies are moving very positively as of now. But yes, as we have mentioned, on Wednesday, there has been a deep correction in majority of the Adani group. And last day, we have seen a very strong pullback. So now there can be a gradual up move that can be seen in the coming period. So one should not be very much aggressive on the targets for the Adani companies. But in the coming period, there can be some gradual up move in majority of the companies. As I already mentioned, Adani Power still looks positive to me, and from here onwards it has the potential to surge approximately 3 to 4% on a short term perspective. So accordingly, one should have their risk management with Adani related companies, because they can attract strong volatility in a day, and even they have the power to pull back the same volatility for the another day. So one should definitely keep a very strong risk management for Adani related companies. But if I have to tell you about the overall picture, then overall picture remains positive for majority of the companies, and these kind of blips should be acting as a strong support or accumulating a zone for short to medium term investors.
And Mr. Chokalingam, do you track Adani Group companies?
No, we missed this opportunity of a rebound. Those who are lucky to hold, they may hold, because political stability, anticipated political stability is positive generally for all large cap stocks, and therefore one can hold. Among all these Adani groups, definitely Adani Port is a good long term bet, and therefore if there is any small correction also, one can buy Adani Port.
Okay, and talking about some of these IT counters, if we can pull up KPIT Tech, that is one of the gainers for you from the mid cap space today. And the stock is right now trading at 1449. That's the level. Okay, 1450, that's the level. 1.5% uptick there on KPIT Tech. Mr. Chokalingam, what are your thoughts on mid cap IT space and on KPIT Tech? Any other stocks that you like? And between large cap IT and mid cap IT, what would you prefer?
In fact, I have been extremely bullish on last 10 years on the small and mid cap IT. But I think now it is time to be a little cautious, and definitely counter like a KPIT one can sell, because as per the industry estimate, the IT service export is likely to stagnate in this current calendar year. And that we also know that even in rupee terms, some of the companies are not able to maintain a robust revenue growth. So one should be a little cautious, and definitely overvalued stock like a KPIT one should sell.
Achha. Okay, fine. What about you, Osho?
See, there are some counters which are still looking positive. There can be some kind of blips that can happen. But on technical parameters, once the counter enters the oversold territory, then one should try to accumulate these counters. So I have a different view. It's not very optimistic or aggressive targets from here onwards, but certainly one should try to accumulate these counters on every dip. For KPIT specifically, it is hovering near the previous swing low of near about 1400 odd levels, and even the 200-day SMA is somewhere near about 1300 odd levels. Even the technical parameters has cooled off from a overbought territory towards the oversold zone. So from here onwards, there can be a gradual up move. So one should try to accumulate these counters in a staggered manner, not aggressively, but in a staggered manner for a decent returns over a period of time.
Okay, and what would be a top pick from the IT space? One
from the
top
IT space, the large cap I have already recommended Infosys, because it has given a strong pullback. From the mid cap, Dixon Technology is looking very positive, because it has given a breakout in the month on 19th of February, and after that there has been a strong rebound, or it has retested the neckline of the breakout, and again is on a verge of giving a very decent up move. So Dixon should be kept in the radar for traders community. Near about the lows of yesterday's lows of 6500 should be kept as the stop loss, and on immediate basis 7200 and 7180 should be seen as the target for short term perspective.
Okay, and let's pull up oil marketing companies as well. They are of course under pressure after the reduction in petrol and diesel prices. Let's pull up BPCL, let's pull up HPCL, Indian Oil Corporation, and the fact is that fuel prices in India were left unchanged since May 2022, and this is despite the correction that we have seen in the crude oil prices. Mr. Chokalingam, coming to you, how do you see this cut, and what would be the impact going forward?
Yeah, definitely it will be negative in the short term, but I will not be surprised if more cut happens, in the next 1 month also, till the election code comes in. So therefore, I would suggest that one can use this opportunity to exit, and in case they fall another 10%, then one can come back to oil marketing companies.
What are your thoughts, Osho?
See, there are various counters which have seen a decent correction, and I'm expecting that the correction is further pending in these counters. Specifically, if I'll be talking about the technical setup of BPCL, then I'm expecting the time it breaches below the zone of 580, it might attract a lower targets of nearly 545 to 550 on immediate basis. So there can be some further correction that can be seen in OMC. So one should wait for further correction, and then can try to accumulate the counter. Even the traders or the aggressive traders can even look for short opportunities or sell opportunities in these counters.
I want to discuss Coal India as well, because this stock is up 90% in just 1 year, and right now if you see, it is of course under pressure. 418, that's the level, 2% downtick there. So Osho, do you see this correction as an opportunity to buy when it comes to Coal India?
See, overall, there has been a very linear up move in Coal India from the zone of 220 towards the zone of approximately 500 odd levels. This week, it has corrected near about 9%. But if I have to tell you about the retracement, it has not even retraced 30% of the rally which it has seen. So I would be expecting a further correction for a downside target of immediately 380, 390 kind of a levels, and then one should try to accumulate it again in a staggered manner for short to medium term times.
Okay, and what are your thoughts on Coal India, Mr. Chokalingam, and any other PSU stock that is on your radar?
No, Coal India, we recently closed our call after making almost 55% return. One should remember the fact that Coal India normally trades in single digit PE, and secondly, every third or fifth year it has massive wage revision. So it's not able to consistently maintain a solid growth. Of course, long-term prospect is very good. If somebody is willing to wait for 2 to 3, 4 years, one can hold. Otherwise, one can wait for more correction to pick up the stock.
Okay, absolutely. And any other PSU stock that is on your radar, Osho, after the recent correction that we have seen?
See, I expect the correction to have a further movement in majority of the PSE companies. So I'm not very much optimistic on the markets as of now, but there can be some consolidation or correction in the near period. Post that, one should definitely try to gauge buying momentum in majority of the counters.
Okay, absolutely. And Mr. Chokalingam, talking about these banking counters as well, and I'll go to Osho as well for this. But what are your top picks from the banking space? We haven't seen much action happening in the private banking names like HDFC. Right now also the stock is trading at 1451, hovering around that 1400 odd level mark. So which one would you prefer, private banks or public sector banks? Any picks that you like?
Till recently, I was extremely bullish on PSU Bank, and they multiplied. We used to have a coverage on Bank of Maharashtra, Indian Bank, all those banks, but they all multiplied. Now, if you look at history, PSU banks normally trade at the 0.5 times price to adjusted book value in bear market. In extremely bull market, they trade at 1 to 1.5 times. But today, most of these PSU banks are trading at even 2 times quality banks. So I believe they are all fairly priced. And therefore, I prefer private banks, particularly large private banks, So that's why I picked up HDFC Bank and Kotak Bank. These two are not participated in the whole market rally or banking sector rally. So I like them a lot. I believe that this is a great opportunity for medium to long term investors to make a decent return and also with a lot of safety.
What about you, Osho?
See, there are various counters, specifically in the private sector bank. Many counters are looking very positive, like Kotak Bank, HDFC Bank, which already has been mentioned. So these counters have seen a very drastic fall, and as of now, they are placed at a very strong support zone on weekly and monthly time frame. So I can definitely see that from here onwards, the downside is very much limited, and the potential to move on the higher end is very positive. But even some of the PSUs bank are looking very positive. Union Bank, Canara Bank, these kind of banking names are looking very positive. They have seen a decent correction, and this should be seen as a very positive development for the investors to accumulate these counters from short or even for longer duration in PSU as well as private sector banks.
Okay, by the way, the mid cap index is now down 328 points, 46,573. And small cap is also down 48 points, and Nifty is right now trading at 22,035. The low that we hit today is 22,015. Let's see how the action pans out. But do you think this correction is gonna continue, Mr. Chokalingam, in the mid cap space? Because right now also we can see that all that recovery that we saw, that is now gone on mid cap index.
Yeah. So, as I said, historically, ever since BSE started small cap index, if you look at the trend, every second, third year, small and mid cap fall very badly, particularly the small cap index fall very badly. That history consistently get repeated. And this is our first time from 2020 bottom, we have not seen till a week ago any major fall in the small cap. In fact, small cap index, the rise in the small cap index is almost 3 times the rise in the Sensex and Nifty from 2020 bottom. So if you go by history, yes, the small cap index has corrected 10%. I believe it can correct another 10% at least. However, in the last more than 3 decades, I have been always recommending 100% small and mid cap only. This is the first time I am taking a contra view. That is only because now the history has got a logical reason because of the relative valuation. And second, this time is quite unique. What has happened, as I mentioned earlier, there are 3 segments of small and mid cap. The one segment which gives me a lot of worry is that I have seen some companies which did not have revenue for 5 years. Suddenly, last 2 quarters they show some revenue, and the market cap jumps about 1,000 crore. So there are few hundreds of companies. They are valued a lot, and without quality management or quality balance sheet, without any valuation comfort, name change. They align the name with the theme in the market. So that particular segment is giving me a lot of worries because they account for several lakh crore of market cap build up in the last 3 years, and that is where I believe a lot of small new investors, they are rushing, and based on the momentum they are buying. So when they start cracking, they already started cracking. Even yesterday, some of them started falling. So what would happen? Unfortunately, they would pull down even the stock which I am recommending because the quality stock will fall less and very bad stock will get downward circuit. So therefore, a lot of new investors will be forced to sell quality stock, at the same time not able to sell the inferior stocks. So this packet gives me worry. So therefore, I believe there is a possibility of anywhere 5 to 10% correction in the small cap index, but that should be an opportunity because let us not forget that India is next to 5 years, the market cap can become even $1 trillion. Right now it is, sorry, 450, right now 390 lakh crore. This can become even, 500, 600 lakh crore in next 4 or 5 years. And I am extremely bullish. So the first segment where the quality stock, available at attractive potential for medium to long term. So in this space, next 1 or 2 months, as the small cap index corrects, those are the stocks one should buy. Definitely, the investor can create a lot of wealth. So therefore, to conclude, I say that look at the quality of management, the listing experience, the balance sheet quality, particularly the debt to sales or debt to equity, and then receivable and inventory as a percentage of sales, and see whether they destroyed the wealth repeatedly or post bull market every time in the last 15 years. These are the 5-6 parameters you see. I'm telling the investors that this is the way to make a lot of wealth in the Indian market. for the next 5 years.
Absolutely. Got that, Mr. Chokalingam. And I think everyone is bullish on India's growth story. And it's just that there was a mismatch, I think, between fundamentals and the valuations. Of course, for some selective companies. And of course, you have to be selective when it comes to the stock selection. And that's why we have the best market experts on our show daily. Lastly, Osho, let's wrap up this show with your thoughts. I mean, when is the pain getting over when it comes to the broader market space?
See, overall, there is not any pain in broader markets. In the benchmark indices, broader markets, yes, there has been a correction of nearly 6 to 7%, but that is a part and parcel of equity market. There can be volatility, because if I have to tell you about the recent development in the last year, we have seen a fabulous growth of over 1.5x. So from there onwards, if there will be any correction of 7 to 8%, that should be considered healthy, because the momentum was very linear. So these kind of corrections should be providing ample opportunities to re-enter into various counters. Again, on the terms of valuation, many companies will return back to the real valuation or near about the fair valuation. So majorly the market, the primary trends remain positive. Such kind of fluctuations, volatility can be seen and will be seen in the future also, but these should be seen in a healthy manner. If I have to tell you about the benchmark indices has been hovering near its lifetime highs. There has been no distraction or disruptions on the technical development. So one should not be very much maintain some caution in the market. For short term, yes, there will be some challenges, but for medium to longer duration, one should definitely see a very strong growth in our market, and I expect a very strong ROI in majority of the large cap, followed by mid cap companies.
Okay. Absolutely. So, chaliye, lots of opportunities for you in this correction that we are seeing at this point in time. It's just that you have to be selective and you have to stick with quality stocks. On that wonderful note, gentlemen, thank you so much for taking the time out and joining us here on BTTV. Thank you, Osho, and thank you, Mr. Chokalingam. So with that, ladies and gentlemen, it's now time for us to wrap up. 22,000, that's the level on Nifty that is still intact. Let's see how the action pans out going forward. And for that, you don't have to go anywhere. You just have to stay tuned to BTTV. Lots more coming up for you. So stay tuned, and many thanks for watching.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Hello, Namaskar. You're watching BTTV. I'm Tanya Aneja. Well, we are going to focus on PSU stocks in this video. PSU stocks have had a stellar run. Many of them have already given multi-bagger returns. We have been discussing